Hello everyone, this is Brandy Williams with an educational accounting and tax video. Please like, share, and subscribe to my YouTube channel. You may also follow me on Instagram, Facebook, and TikTok at WilliamsAccTax. On LinkedIn, connect with me by searching Brandy C. Williams Mac. Lastly, visit my website, WilliamsAccTax.com, to review my bio, read my blog, enroll in tax school, contact me, and schedule a free consultation. I look forward to hearing from you. Enjoy the video.
Do you need to pay self-employment taxes? Taxes are an integral part of the U.S. economic and financial system. As an employee, you need to pay a number of taxes, including but not limited to income tax and employees' portion of the various other taxes. On the other hand, if you are a self-employed individual running a small business in the United States, you are required to pay a few additional taxes, which we shall discuss in this video. Basically, as a self-employed business owner, you are both an employee and an employer of your business. Hence, in simple terms, you are required to pay both portions of taxes to the authorities totaling 15.3%. First of all, it is important to understand the concept of self-employment in context of the U.S. tax system. For this purpose, all sole proprietors, freelancers, and independent contractors are recognized to be self-employed. Similarly, members in most business partnerships are also identified as self-employed individuals. Self-employment tax is your essential contribution in exchange for receiving Social Security and Medicare benefits, and these taxes are reported on Form 1040 Air Schedule C. There are two components of self-employment tax: one, Social Security; two, Medicare. Calculations for both components need to be understood and calculated separately. If you have had a previous employment, you might be paying 6.2% of your net income as a contribution towards Social Security. You may also be aware that your employer was also contributing the same amount. So, the total contribution for Social Security is 12.4%, divided equally between the employee and the employer. Since you are both in case of self-employment, you need to pay the same percentage of your net income. However, the encouraging news is that there is a maximum cap to the level of income that is taxed for Social Security benefits. The latest maximum cap, as in 2023, is $160,200 annually. So, if you earn more than that, you only need to pay 12.4% of the first $160,200. In other words, the maximum amount of annual tax in this regard is $19,865. Coming towards the second component now, the rate for the Medicare-related portion of self-employment tax is 2.9%. This, again, is divided equally between the employee and employer at 1.45% each. As a self-employed individual, you need to pay 2.9% of your net income as a Medicare-related portion of self-employment tax, in addition to the 12.4% previously discussed. Another important fact to remember here is that there is no upper limit to the taxable income for Medicare. Hence, you need to pay 2.9% on all of your income. What if you have more than one source of self-employment? You may have more than one source of self-employment. Both portions of self-employment taxes are to be paid on all income sources, except where you earn less than $400 in the whole year from any single source. Practical aspects of self-employment taxes. Self-employed individuals are not liable to pay withholding taxes to the IRS. Hence, the tax authorities require self-employed individuals to make quarterly payments based on the estimated tax liability for the period. While calculations for self-employment taxes are not that difficult, this form of taxation could still get tricky in most cases. The fact of the matter is that small business owners rarely employ or hire tax professionals. Hence, they need to do most of the work themselves. Moreover, many remain ignorant of the need for completing paperwork and documentation. A simple trick to reduce the burden of self-employment taxes at period end is to perform your calculations on a monthly basis and make sure to set an estimated amount of money aside for quarterly payments to the IRS. You will also need to reconcile your actual income and tax paid to the IRS at year end, which may result in making additional payment or claiming refund from the taxman. Last but not the least, keep yourself informed of the latest news and changes in law related to self-employment taxes. Most business owners are too busy with setting up the business and running its day-to-day operations to research tax updates. Hiring a professional tax consultant to help you through all stages of filing and paying taxes is a reasonable alternative. A tax professional may also help you in minimizing your tax liability by using his or her experience and knowledge of various options available in the tax code.
This is Brandy Williams. I hope you enjoyed the video. Please like, share, and subscribe to the channel, and follow us on all social media platforms.